Hi, I'm Andrew Spieler.
And I'm Mary Hope Rennie.
And you're watching or listening to Behind the Sign, Real Stories from Real Estate. Welcome everybody back to Behind the Sign, Season 2, Episode 3. We're excited to have you with us today. We have a very special guest, Mary Hope.
Absolutely. Yes, we'd like to introduce Sean LeBlanc. Is it LeBlanc or LeBlanc?
Well, I answered to both, but technically it's LeBlanc.
Yeah. LeBlanc. Yeah.
It's a prettier version. Yeah.
Yes.
Like
it's the French version.
It's one of those that you've always called it something, then you realize as you're saying it, I'm like, I don't know if I say it all.
You know, I got to say, every time I get onto a podcast episode, even if I know the person really well and I know their name like through and through, I instantly I'm like, you don't know their name. You're going to say it wrong. And I blank out.
I have lifelong friends who say LeBlanc, so it's no problem.
There we go. Isn't there a LeBlanc heating and cooling?
There's LeBlancs all over the place. French
but you
Canadians.
are LeBlanc.
Yes.
Okay, there we go.
Technically.
So Sean LeBlanc is here as our guest, so thank you. And what we're wanting to talk about in this episode and the following is investment. Mm-hmm. Because we like to dive into all the elements of real estate. The name of our podcast is Behind the Sign. Delving into what real estate can look like. That doesn't mean a real estate agent per se. Mm-hmm. Real estate. And I know that you've been kind of in the real estate world for a long time. And I'd love to hear from you kind of a little bit about you and what got you into this avenue of real estate, because you've dabbled into others as well.
Absolutely. Yeah, absolutely. So just a little bit of background. I'll back you up a little bit. I graduated college 2012, really, no idea what I wanted to do with my life. I knew I wanted to make lots of money, and I wasn't sure how I was going to do that. So I jumped into a sales job. I found out very quickly that I'm essentially unemployable. I cannot.
Okay, wait, tell me more about it. Unemployable.
I just, my personality type's very unique. I have authority problems, and being told when to be somewhere, when to do things, what to do, it just didn't sit well with me. So within a matter of months, and my first real job out of college, I was in a quarter-life crisis. I was trying to figure out, what am I going to do to make money? I cannot do this. It's not sustainable. What can I do? And ultimately that led me to the mortgage business, which was as being a real estate agent, commission-based sales role, no base salary, which was scary, but I also heard you get to make your own hours and nobody tells you what to do. So I was all right, I'll take the risk, I'm in, as long as there's no boss breathing down my neck, I'm in, which is my first intro into real estate at all. I really had no background in it growing up, was not exposed to it whatsoever through my family. Couldn't even spell mortgage when I got into the mortgage business, so I was fresh. You know what I mean?
Silent T, man.
Yeah, that silent T will get you. And that, as soon as I grasped real estate finance, kind of learned to speak the language, I really started to gravitate towards investing. And during that period, I was on kind of a self-development journey, reading lots of books, lots of Tony Robbins, things like that.
Yep.
In that journey, combined with being in the mortgage business, I found myself reading Rich Dad, Poor Dad for the second time. I'd read it back in high school, went totally over my head, had no impact. Read it a second time in my early 20s and just completely changed my life. Closed the book and was infatuated with the idea of becoming a real estate investor. It just was just really driven home to me that being an employee is not really an efficient way to earn income, and that being on the investing side of things is really the most optimal way to earn income. And I was so taken with that I ultimately wanted to build a business around it.
Yep.
So my mortgage career was about 7 years long, so I had a good stint in the mortgage career. I was okay. I did well. But never had that true passion for it. Always had one foot out the door, kind of like as soon as I can afford it, I'm doing this investing thing. Yeah. So fast forward, I buy my first property in 2015. So I've been buying and managing properties for about a decade now.
So that was only 3 years out of college. Right?
Correct.
You said you graduated in 2012?
Yeah.
Okay.
Yeah. So fairly young. Yeah.
Yeah, you were itching.
But because I was in the business, I was very, accustomed to the idea of owning property at a young age. And
we're lucky that that's automatically kind of in our brain.
Totally.
Right. Yeah.
And it was that book and that idea of being an owner just really just resonated with me. Was you need to own assets. It's the only way to really get ahead. This W-2 income is not the path for me personally. So that I scraped and clawed everything I could to get into that property in 2015.
What did that property look like?
It was ugly. It was.
I mean, I guess not aesthetic, but why did you buy that one?
Yeah, it's a great story. My
I
first.
think I've heard it maybe a little bit, and that's
sure
why
you have.
I
Yeah,
thought that
'cause
was a pretty good
It's
one.
a popular one. My first deal, it was super unique. It's not a property that I would look twice at today. It was a very ugly duplex on Craigslist, off market, and it's a very unique story because I was able to buy that deal using something called seller financing, which is essentially where the owner acts as the bank and agrees to take payments over time as opposed to a lump sum for their purchase for the real estate. So I did that out of necessity. It was all I could afford. I could
Right.
not put down 20%. I didn't have the money, so I had to
Right.
find a way to get in at a lower down payment. I was able to accomplish that with seller financing. I get into this duplex. I make every mistake you could possibly make. The well goes dry the first week.
Of course.
So I'm in credit card debt within a matter of weeks. I emptied my savings to buy it. I had to go into debt to fix it. I'm like, what did I do here? Ultimately, I struggled through a process to subdivide that lot into three lots altogether, and was able to sell 2 building lots off to a builder, which gave me kind of my jump start into real estate.
Did you know it was subdividable when you bought it?
Not at all. No, not at all. Not at all.
I love
Yeah.
that because I think so many people, and actually we haven't even said where you have gotten, and we'll talk about that.
Sure.
But so many people see somebody who's successful, right? I've been in real estate for 16 years. I can tell my quick story, right? That I did this, doubled my business, da-da-da-da. Now I've been able to step out of it. My husband took over. We have that elevator speech.
Right.
Yet it never starts pretty,
No.
right?
No.
And it never starts that you know what you're doing fully. And I think so many people in real estate are so afraid to take that first step into investment.
Investment, and that's the idea, and ultimately that investment sprung me into a
Right.
career of building a business around real estate investing. Now we're over 250 units. I have an in-house management company who manages the portfolio for me, and it's become a real business, which started just taking a giant risk back when I was 25 years old.
Which
And
you even said you would not do that right now.
I would not do that right now. I would not look at that deal again right now. And there's something to be said for being young and being able to
Right.
take risk and based on your circumstances. But my theory on investing is there's a path for everyone. Is once you've covered your basic expenses, right? Once your living expenses are covered, you have your basic human needs of food, water, shelter. You're providing for your family. Everyone has what they need. A switch should flick in your brain to investing almost immediately. And I think people take far too long. I think they save way too much before they feel like they're in a position to be an investor of any kind. And I think that basically the best thing I ever did was just starting early and
Yeah.
taking that risk early and willing to basically transform that savings, which think of it as cash. These days, it's basically just numbers on a screen, right? You're logging in, you're seeing these numbers on a screen. They're giving you some sort of security. Can you transform those numbers on the screen into an asset that's going to appreciate and maybe even pay you along the way via cash flow?
Yeah, possibly.
Exactly.
Yeah, not
That mindset shift of taking that money, freezing it in time, converting it to an asset, and instead of letting it just drain out of your account, because I know how my accounts work. I have 2 kids at home. I have a wife who likes to spend. If that money sits there,
you did not hear that.
if that money sits there, it's going to drain away to nothing, right? Through stuff and food and groceries, it's just going to
We
dwindle.
will spend what. Well, you said something that caught me. That you said, make sure you have your basic necessities, and then invest. So many times when we get to covering those expenses, then we just spend more.
Splurge, yeah. Well, your cost of life goes
Or
up.
we just
Have the
push
means.
the envelope, right? We can, right, our cost of living goes up because we can.
Right. So for me as a 25-year-old, I knew nothing but being broke. I had no responsibilities.
that.
I had no children. I had no real payments. I had no
Yes.
real overhead. So for me, I could afford to empty my bank account and then some to get into my first investment with the goal of this ultimately becoming a cash producing potential career for me. That may not be your situation.
Right.
If I was a breadwinner of a family at that point in time, I cannot take that risk. It wouldn't be responsible.
No.
But there's something you can do, whether it's you're socking away a few $1,000s a month, whatever it may be, into a separate account that ultimately I need to invest this for my future. So really, I have a lot of weaknesses. One of my biggest strengths is I think with the end in mind. I have a very long-term mindset. So I really have designed my life around where I want to be in the long term. And I think that once you kind of step outside of your monthly bills, your weekly bills, and you start to think, where do I want to be long term? If you can devote even a little bit of money to your future self, which is what investing is at the end of the day,
Right.
I think it's super powerful. So I just think people need to think about it sooner. I know lots of people with 6 figures in their checking account, and I'm just like, what are we waiting for here? Once you have a few months of expenses saved up, you should have a safety net. But after that, put your money to work, and that's what Rich Dad Poor Dad, like it just sunk into me so deeply that your money working for you is kind of the ultimate goal.
Were you married at the time?
No.
No. Were you dating at the time?
I was very broke, unsuccessful as a loan officer, living with my girlfriend's parents in her childhood bedroom. So didn't have a lot going for me.
Did you
And
know
it's the same girlfriend that's now his
Now
wife.
my wife.
Sure.
And,
Yeah, okay.
and the 2 kids. We want to make sure.
Yes.
Right. So,
yes.
because the question being, did you sort of know that like you wanted to have kids? Because Rich Dad Poor Dad, right? Like, I mean, I very much think the same way. Like, I'm always thinking very long term. Like, I always knew I wanted to have kids. I always wanted to find the woman who would give me the opportunity to have kids. So, like, every little block is building towards something. But did you have that inclination for being a dad at that point too? And knowing that you were setting up for it?
Absolutely. Yeah. I realized very quick about myself. So I was a mediocre college athlete. That was the first part of my life where my whole entire life was athletics. Once that dream died, like it does for so many young men, it's like kind of the young man's first heartbreak. He realizes he's not going to be a pro athlete, right? So once that dream died.
It lasted through college. That's pretty good.
It did. It got through college. So I had an
What sport?
Lacrosse. So there was never really a high income future there anyway. Anyway, so once that dream died, I'm a very realistic person. I'm extremely self-aware. So I had a useless state school degree that I never paid attention. All I cared about was sports in college. I know, okay, I'm not going to be the president, right? I'm not going to be.
That's good that you.
I'm not going to be a famous author or painter at this point. So, like, what can I do in terms of within my abilities? How can I leave a legacy, right? Which legacy is extremely important to me, which I believe is driven a lot off of ego, which I'm happy to admit, but. Basically, within my power, what can I do? And I've chosen to focus on my close circle, my family, as my where I want to make my impact, and that's how I've designed my entire life. So that's why I quit my mortgage job, because I knew I wanted to have complete and total control over my time. So I'm a time junkie. I'm very much the opposite of these hustle culture, go-getter guys who are like, you got to schedule every hour of the day. I keep an open calendar. This was the only thing on my calendar this whole week was this podcast. So like, I don't want.
We now have to remember if we need an app open gap thing, call Sean.
That's right.
Yeah. I don't want anything on my calendar that's stressful for me. My company, I tell them every time we have a meeting, I'm like, this meeting was too long. It could have been an email. Let's try to be better about that. So. Very few meetings. I don't like a lot of things on my schedule.
I'm getting a bigger vision.
So I'm very self-aware with that. So I designed what business do I want to get into.
Yes.
Real estate, I thought it was passive, I guess, when I signed up for it. I've learned it's the opposite of that, but it still can be. I figured, okay, maybe I'll get a property manager. I chose to ultimately build my property management company in-house, but I could hand it off tomorrow to a property management company and still have total control over my time, which is really my number one priority. So I backed into my kind of life where how can I create generational wealth, which is kind of a buzzword these days, but it's important to me. Can I create a leg up for my family going forward financially so they can be less stressed about making a living? And can I also kind of enjoy the ride? Can I, pick something where I'm, enjoying my daily work? I feel like I'm accomplishing something, but I'm also, building this generational nest egg that ultimately my family can benefit from. So that's why I arrived at real estate as the perfect business for me and my skill set. I'm not a genius. It's a very simple business. It's proven by time. It's proven by just banks, by risk assessors as being very, very, very solid in terms of an asset class. So I thought, okay, that's the one for me, and I built the business around that asset. So.
But I think you said you don't have to be a genius to this, but what you have done that I think most people don't do is when you decide you want to get better at something, you dove into it 100%. You mentioned that a little bit. You read every book.
Yeah.
I know you study this more than probably anyone else I know in this industry of exactly what you're doing with investment. Which that's the thing. Investment's a big world out there, just like
Broad,
real estate is. It's very broad. When you went into it, did you plan to purchase and hold, which has kind of become your thing, right? Because you have over 200 doors. Did anybody understand that? That's a big portfolio, and I want to. You said that quickly. How many was it? 200.
I think it's 256, somewhere in 250s.
And I think that makes Aaliyah's heart palpitate a little bit.
Sure.
But she's also in the real estate world too,
Right.
which also does help.
Of course, yeah.
That if you have to have someone on board. 256 doesn't just happen.
Yeah.
Right.
You need to have someone on board to support you with that. But that means that you're buying and holding, buying and holding. Was that your plan at the beginning when you bought your first investment? You know, when you got into real estate?
Yeah, and I just totally agree with you that investing is like the most vague term there is. Like it's a giant catch-all.
Yeah.
You know what I mean? There's so many ways to go about it. And back to my point, like there's a path for everyone. For me, I was stepping away from my job, right? So this was going to be my full-time occupation. If I just buy a duplex a year, you know what I mean? That's not, first of all, I'm going to be sitting on my hands, nothing to do, and not very lucrative, right? So I knew I had to go big right away. So I went into this with the intention to build a business, and I've actually scaled back my ambitions from where I started. When I first started, it was like empire builder. Let's go out there and thousands of units. The more, the better. Buy. And then what you realize very quickly is like when your business is buying real estate, you run out of money, right? There's a cap on your funds. So, I bought as much as I could with my own money, and I very much subscribe to the BRRRR method, you could call it: buy, renovate, refinance, and repeat. So my goal was, I only have this limited amount of funds. I need to recycle it as fast as possible, right? So I'm getting into properties. I'm increasing value as fast as possible. I'm recouping that capital either through a refinance or through a sale quickly so that I can go buy something else. So this is really the only way, without being a trust fund kid, to go out there and buy multiple deals a year, is you got to be constantly recycling through this capital. So by necessity, I've done that. I've moved through deals very quickly. I've sold properties that financially would make sense to keep forever, sure. But I have a business to run. I have a lifestyle to support. So I'll sell properties, move on to the next one, move on to the next one. It keeps my team busy and everything like that. That's my path. I'm a full-time investor, right? So 100% of my income comes from this real estate operation. So I'm in it every day, and I'm managing extremely intensely, and I need constant activity on a yearly basis. So for me, I had to go big. This is my full time. I was trying to replace a pretty decent mortgage income. I had no choice but to get out there, start raising money.
You didn't have a safety net. Yeah.
Exactly. For other people who have a W-2 they enjoy, or another source of income, a business that's throwing off a lot of cash, they can go about things totally differently, right? They can be much more selective. They can choose to buy one property a year, one property every couple of years. But at the end of the day, you should still remember that what you're buying is a business. I think people, the investing term doesn't really apply if you're going to be self-managing yourself. You're essentially buying a fully operational business that you're now working in. So I think people need to be aware of the avenues that are available to them as an investor and match that with their personality type and be honest with what works for them, right?
Got it.
If you imagine like a chart, it's basically how active and passive do you want to be on one side, and how, your risk tolerance on the other side, your risk tolerance on the other side. So you could be somebody who has no time, but tons of money. So they can't be active at all. They need to be totally passive, but they have a high appetite for risk. Maybe somebody like that is going to be lending money to flippers. They're lending money at 15 to 20% on 6-month terms. They're recycling their funds quickly. There's a high risk factor that one of those guys stops paying you, but they can afford it because of their situation,
there's
right?
Cash flow.
Yeah. So it's all about your life, your personality type. Match that with what type of investing works best for you.
Okay, so you're 10 years in. That means what? You're 35?
Correct.
Really young.
So
That's
young. So young.
10 years is a very short time in real estate.
Sure, absolutely.
Right? Like in the scheme of things, when you're talking legacy, when you're talking...
Yes.
where do you see your business in 10 years? You're only going to be 45. You're going to be younger than I am right now. So let's just,
you know, like I mentioned, like I alluded to earlier, when I started, it was just bigger is better.
Right.
It was grow the empire.
That's why I want to,
It was grow the empire, as many units as I can possibly get. I would say having kids kind of was a monumental shift in mindset around that, and it just became more like, okay, let's just again back into our goals here. So I love real estate. I truly actually have a passion for it. I think that's worth mentioning. Like I like the bricks and sticks.
Yes.
I like the architecture.
You enjoy it.
I love the old buildings. I love renovating properties, maximizing
you find
their
joy
efficiency.
in doing
I
that.
truly like it. Yeah. So I truly find fun in
you
that.
You need to. I feel like if you're going to be doing 250 stores.
Yeah, exactly.
You got to have passion for it.
Yeah, exactly. So yeah, I love it. I forget where I was going with that, but
where you want to be in 10 years.
Yes, exactly. So I've gravitated more towards taking less risk, obviously, as I have more to lose. I think that's a natural progression. And my goals in 10 years, I'm still going to be in building mode. So I just am going to continue to build the portfolio with quality properties. My big thing is I want my properties to be full of happy tenants. So like I really am in the weeds on management. I try to differentiate ourselves. I try to be like a management company with a heart, where we're kind of getting rid of that adversarial relationship that tends to naturally form between landlord and tenant. We try to treat our residents as customers and really go above and beyond. And like I tend to operate properties with a higher expenses than other people because I run, but they're way more taken care of. They're more quality assets. My tenants have a better quality of life. So that's my big thing. Keep building the portfolio. Ultimately, the end game for me is I'm going to, sell everything and trade it into a personal portfolio that's, owned by just me and my family and, put that into trusts and try to keep my kids from selling it as soon as I'm gone. But, that's what we're backing into. Ultimately, I believe in real estate long term. So I'm honing my portfolio. I would say I have, out of the 260 or so units, I have about 50 that I have in my forever pile. Okay. And everything else, I'm just looking to focus on what I call the velocity of money, which is just you keep that money moving as fast as you can and picking up more and more return and keep that snowball rolling downhill. So those other deals that I'm in, I'm just opportunistically getting in and out of properties and trading up into newer, nicer, bigger, and selecting the ones that are in the forever pile and kind of setting those aside on long term. And ultimately, I'll have a trust that's, full of property that's mostly, if not all, paid off with a management company wrapped around it to kind of insulate my family from having to do too much actual
Where are the majority of your properties, and like what kind of property types have you sort of honed in on now?
Yeah, so we're all in New Hampshire right now. I had a portfolio in southern Maine that I recently sold. So we're all in New Hampshire, I would say up and down the 93 corridor for the most part. Manchester, Concord, Laconia are three hotspots up and down. And then I have a 72-unit complex over in Barrington, New Hampshire that we manage as well. So we have now gravitated, I would say our niche over the last couple of years is 20 to 75 unit properties. Really, to drill down would be like 70, 80s built, garden style complexes is like what we really, excel at and enjoy working on. I still have a large portfolio of older, downtown assets, more traditional New England multifamily, which comes with its charms and headaches. But yeah, I really like that 70s, 80s built stuff. That is a...
which is interesting because most people don't like that 70, 80.
Yeah, well, in the apartment game, you talk to people... you talk to people across the country and 70s, 80s is ancient, right? Yeah, so they're like, I can't believe you touch anything like that, the old utilities, but they don't realize that the rest of the property stock in New Hampshire is 1900s.
You know what I mean? Like everything else is older.
So for us, 70s, 80s is a very rare, I call it like a extinct artifact of the real estate world because they were built in the 80s when it was cheap to build. And they're straightforward buildings. They're typically just boxes, cut and force.
They're not
so
pretty.
There's nothing pretty or fancy about them.
And that makes it simple to manage.
Yeah, but they're simple to understand and they're simple to manage. And what you have now is they're unable to be replaced. So if you want to build an apartment building now, because of the cost of material, because of the cost of debt, you have to go high end, very high end, in order to make that project pencil. So every project that comes online is highly amenitized and is highly finished, and they're popping up left and right now in Manchester, and that's what you have to do to get the rents to justify that business plan. So affordable housing, these people who are in kind of a niche in the housing world where they don't want to live in downtown Manchester in a duplex. They don't want to, they don't like that situation, 1900 with a boiler. What we can provide for them in our garden style apartments is clean, safe, secure, highly updated. You know what I mean? You're in a complex with off-street parking, lighted parking lots, professional snow removal. You're a step above that duplex, that 6-unit living experience. But my folks, they can't afford the brand new, $4,000 a month with a gym and the coffee shop down below. They don't need it. They don't want it. You know what I mean? They want clean, safe, and affordable. Exactly.
The mid-tier.
They want clean, safe, and affordable. So it's this unique class where the people move up into our tenant base out of downtown, and then they move down into our tenant base when they're selling a property or they're divorced or whatever it may be, and they're looking for just something that's affordable, safe, and clean. So I believe so strongly in that sector of the market that I just plan to continue to buy, as much of that as I possibly can. I think that's where I feel safest and secure with my capital, with investor capital, is in those types of assets. So the problem is there's so few and far between in New England. There's very few of them left. So it's a competitive market, which means I'm going to buy less on an annual basis than I used to. But hopefully the deals that I buy are of higher quality. So
I love that you said you've been selective, because I think so many times we're so afraid to buy that first one because what if it's not the right thing? Those kind of things, and I have to overthink. I'm an overthinker, so every time I think we probably would have tripled the amount of investments ourselves if I wasn't stopping it, because I overthink it and I have to make sure it's the right thing. But I feel like the way you've done it, because you knew the big long plan, you knew that you were going to start selecting the ones that your forever properties, which I love that idea of not everything has to be perfect.
Yeah, and I realized that quickly. And then I also remind myself, because it's my career, I'm like, I'm doing this to make money at the end of the day. We're not doing this for any other reason, right?
It's easy not to make money.
As much as I enjoy it, I don't enjoy it that much that I would do it for free. So
is it pretty easy to not make money in it?
It's extremely easy to not make money. And people love to tell me about their properties that they don't make money on, that they put zero effort into, right? So that's the thing. A lot of people, which I would say is a pitfall, is they'll save up some money and go buy a duplex with the intent of increasing their income, and then they quickly have a few headaches, and their first year passes and it's a few $1,000s of income, and they move on from it. They don't put any effort into it, and it becomes kind of a thorn in their side. So they love to tell me, it's a real headache, and I'm like, okay, well, what's going on? Well, they're under rented by $300, but I don't want to mess with the tenants. I don't want to bother them. I don't want to, I just rather just leave it alone. Well, I mean, if you treated a business like that, what would you expect in terms of income? You know what I mean? Bingo. So if you're not going to manage it yourself and actually put effort into it like it's a job or it's a business, then you should hire somebody else to do it for you. Otherwise, you're setting yourself up for disaster, I think.
Well, in you saying that, like, that's probably the crux of seeing when agents become successful or not, when they see it as a business. That's probably with anything. Because the idea of self-employment is a novelty. Nobody has to tell you what to do. Yet so many times we get caught up into, therefore it's not a business because I can do whatever I want. But the only way to be successful and not have to work for someone is if you take it seriously and put your own parameters on yourself. Right. Self-management, which I think is sometimes the hardest thing.
The management scares people. And it should, you know what I mean? It's a lot. It can be a lot. But on that same token, I think that people will listen to conversations like this and maybe talk themselves out of buying their first property. So there's a balance between being realistic with your personality type and also not letting people talk out of it, because you need to, if you're buying your first investment, you kind of need to put your blinders on and be careful who you share that information with, because everyone's ready to tell you, what are you thinking? You know what I mean? What do you think? What about the toilets at midnight? That's the number one thing. What about the toilet clog at midnight? What are you going to do? You're not a plumber.
I've never had that call.
I don't think I've had it yet either. So, you kind of got it. Once you believe in the asset class, you kind of feel like you're making a sound decision. I would say put the blinders on, take the risk, and do it. But don't just expect it to be this passive money machine, because it's just really not that. But I can get into, I know we're wrapping up, I can get into, why I love real estate and everything I love about it, but passive is not something I would use to describe it, really.
Yeah. Well, and that's exactly. People get into real estate for the same thing, right? I want to have my own business. I want to have passive income. It is not a passive business. Yet, it has so much opportunity, and people see those end results, right? They see you with 260 units. Like, of course people want that.
Yeah.
Right?
Yeah.
Yet they don't see all the other stuff.
10 years of work to get there.
But,
But
you were willing to put yourself out there and make some risks, but pretty quickly turn it into a business, and it wasn't risks that were uncalculated.
No, and
right?
Not at all. And like I said about my obsession with time freedom, like I'm too quick to delegate a task. So I realized, I think it was 60 units or so, I was doing everything myself, all the leasing, all the everything, all the accounting. And that's when I really started to say, okay, now this is feeling like a job. I'm feeling my time is not in my control. I have a leasing appointment every hour. I drew a line in the sand at that point and said, this is not why I got into this. I'm now working harder than I was in my mortgage business. My calendar's stacked. Got to get out of it. So because I kind of put my money where my mouth is with my wife, she's like, I went and said, I'm selling the 7 unit that we just bought. And she's like, what do you mean you're selling it? We just bought
We
that.
just signed on that.
I'm like, well, I need to hire a 6-figure operator to run this management business. And she's like, you can't afford to hire a 6-figure. I'm like, I know. That's why I got to sell this. She's like, well, then what are you going to do? I'm like, well, I got to go buy some more stuff and keep him busy, but I can't stay as head of this whole business. I need to get out now if I'm going to continue to grow. So I sold my Golden Goose at the time, my highest performing property, took a huge amount of money and just parked it in an account and said, all right, I'm going to build a team. And we hired 3 people within 6 months, and we paid them out of pure savings for a whole year, if not more, before the company was supporting itself, because I knew I had to get out of the weeds, out of those tasks, so I could grow the company. And ultimately, we doubled, tripled the portfolio within a couple of years.
Yeah. So how many people do you have working for you now?
I have 8 employees now.
Okay.
Yeah. Yeah, which is heavy staff, honestly. For if any experienced operators will say, "Oh, that's a little heavy for 260, 250 units," but we're vertically integrated. We do everything in house, so we do all of our own renovations. We have our cleaning in house.
Yep.
You realize very quickly when you're running rental property that controlling those expenses is almost just as important as increasing the income. So I need to have my hands around every expense I possibly can. So that's why I totally built the team out in house, and we manage very, very hands-on, very intensely. So.
Well, and I think you see kind of a bigger long-term goal as well, right? It's not just the immediate money flow, but that you're doing something to create something bigger, and therefore it's worth having the right people, which you usually have to pay the right people a little more.
To protect your burnout, right? Because I could be making a lot of money out of that management business. I'm choosing to give it all back to employees in exchange for my full time freedom, right?
Yes.
And they ultimately have now to the point where they're running it better than I could in the first
and usually
place.
That is. We feel like we can manage it better, but
so there's a critical mass. If you're listening to this and your goal is like, I want to be a full-time investor too, it's just put your head down until you reach that 50, 60, until you can make that first hire, and then hire aggressively from there. But if it's just going to be a small portfolio on the side, I think property management services are like the best bargain going. It's a small amount of money for a lot of work. So.
Yeah.
Awesome.
Yeah.
Well, thank you for coming on and talking about all this. I mean, this is super fascinating.
I know, and
I know
it's interesting.
Year, but
well, and you are soaking it in, because I think I know your story a little more. I love having someone more than myself, because he's like soaking it in. I do want to ask you one last question.
Yeah.
Because we kind of always end with some sort of very kind of back to the basic question. If someone has no investments right now, where the market stands, what would be the first thing they should be doing? Or what is the first steps to investing?
If they've already decided they want to.
Yes,
right?
correct.
They've done their work. They decided they want to invest.
Yes.
If you have no portfolio at all, I think regardless of market, and if you feel like you're in a financial position to do so, you need to take action immediately.
Yeah.
You need to go out there and purchase a property. That is the name of the game. Or you need to invest with an active operator, one or the other. Yeah. But when you've convinced yourself that real estate is a asset class that's worthy of your money, worthy of your hard-earned money, you need to put that money to work as soon as possible. Because the old adage says, the best time to invest was yesterday. The second best time is today. So I really believe in that. It's a compounding game, and you need to get involved and play the game in order to reap the rewards. So just as like a tactical example, if you're going to own or occupy, I think that the 4-unit is the holy grail. You can finance a 4-unit with FHA or conventional financing, even as a first-time home buyer. And they will allow you to take those 3 extra units and count that 75% of that towards your income. So around here, rents are pretty high. You could be adding $50,000 to your qualifying income on an annual basis. And from my mortgage days, consult with your own professional. Things could have changed. But if you can afford a single, you can afford a multi. And what a lot of people do is they jump right to the duplex. And the duplex is a step forward, but the 4-unit, now we're potentially living for free, living in a unit completely for free, which has an extreme compounding effect on your personal savings and will give you a gigantic leg up. And a 4-unit is a real cash flowing asset. You know what I mean? It's not just a duplex or a single. That's a real apartment building. And the fact that you can finance that with 3.5% to 5% down, I think is just crazy and should be taken advantage of far, far, far more. So
I love that. That's and I like that practical thing, because I think everybody listens to podcasts and they see all these things and
how am I going to go buy a 72 unit? How am I going to do that?
Go get 256 units, right?
Yeah, exactly.
That that is just a really practical thing, and I think so many people are waiting for the perfect time.
Yeah, and the only other thing I'll mention is that if people tend to think that they have to be the operator, manager, everything when it comes to investing. If your saving ceiling is 25, 30, 40, 50 grand, that's the maximum you seem to be able to save up. It's not enough to buy your own duplex. Put that money to work with somebody else so you can reap the same benefits on a passive basis.
That's great.
And then that will snowball into eventually owning your own property. So,
I love it.
Yeah.
Well, thank you so much for coming on.
It's great to be here.
I appreciate it. And we could probably talk forever on this.
Yeah, I get going.
That's right. Andrew's like, wait.
I know, exactly. Well, it just means we'll have to do a part 2, that's all.
Absolutely. Anytime. Yeah.
Awesome. Well, thank you.
Thank you.
Thank you guys for watching and listening. We'll see you on the next episode.
Take care. Thanks for joining us for another episode of Behind the Sign, Real Stories from Real Estate.
We hope you enjoyed today's conversation and gained a little insight into the world behind those for sale signs.
Today's episode was brought to you by Keller Williams Realty Metropolitan, proudly serving New Hampshire, Vermont, Maine, and Massachusetts. A special thank you to our agents, leadership, and partners at KW Metro for their continued support.
And thanks to you, our amazing listeners and viewers. Be sure to like, share, and subscribe so you never miss an episode.
Leave us a review or comment. We love hearing your feedback, and it helps more people discover the show.
And if you have a real estate story you'd like to share or a question you want answered on a future episode, reach out to us at metro.kw.com or find us on Instagram, handle @KWMetroNH.
Until next time, we'll see you
behind the sign.